Hi, I'm Wal Galbraith. I'm a part of the Ray White South Coast Group, and this is your South Coast Snapshot for week 44, 2023. The snapshot is designed to give you a bite-sized breakdown of the real estate market overall, including local, regional and city-based information across Australia. All information is sourced from the AFR, leading economist on X, and the Sydney Morning Herald. All information is relevant to buyers, property owners, or both. Looking locally, there have been 92 new listings in the past 30 days to date in 2541, of a total of 245 on the market in total. And in 2540, there have been 191 new listings in the last 30 days to date, of a total of 806. Clearly, the upcoming summer market is causing many homeowners to consider their options prior and post-Christmas on the South Coast. Low capital gains and the large increase in holding costs are prompting more residential property investors to bail out of the inner Melbourne and Sydney markets, data from CoreLogic shows. The portion of investor-owned listings has ballooned to 60% across Melbourne City over the 3 months up to the September quarter, up from 56.7% from the previous quarter and a sharp jump from the 50.9% share a year ago. Tim Lawless, CoreLogic Research Director, said the lacklustre capital gains and the new tax rules in Victoria likely sparked the sell-off, which would continue in the coming months. Michelle Bullock's first Reserve Bank board meeting as governor warned that world oil prices now being pushed higher by deepening conflict in the Middle East could prompt it to lift interest rates again to tame inflation. Quote, the board has a low tolerance for a slower return of inflation to target than currently expected, revealed in the minutes of the October 3rd board meeting released on Tuesday. The minutes add extra weight to the release of the September quarter Consumer Price Index, CPI, on October 25. Many economists expect the figures will provide the trigger for the RBA board to raise the cash rate to 4.35% from the 4.1% at its next meeting on November 7. The RBA has two long-held concerns about the strength of the housing market, which is essentially down to a surge in demand caused by immigration-led population growth and a lack of new supply, with new housing starts at decade lows. The first is surging rents, which are adding to the inflationary pressures the RBA has been fighting for the best part of 2 years. The second is the potential for rising house prices to create a wealth effect that also stokes inflation by lifting consumption. Australian house prices are poised for an annual rebound during a policy tightening campaign for the first time since at least the early 1990s, when the Reserve Bank of Australia began inflation targeting and entered the modern era. National property prices will climb 7.7% this year, a survey of 13 economists shows, recovering a 4.8% decline in 2022. The median estimate for the housing market to rise was a further 4.5% in 2024. Treasurer Jim Chalmers warned that conflict in the Middle East could drive oil prices even higher, as economists predict next week's inflation figures will exceed the Reserve Bank's forecast and will trigger a 13th interest rate rise. Housing demand is set to soar across the country's 4 most populous states over the next 2 decades, fueled by a predicted 7.4 million national spike in population, analysis by PEXA-owned Informed Decisions shows. Victoria is poised to rack up the largest increase in population, with 2 million people to be added by 2041. New South Wales is set to rise by 1.7 million, Queensland by 1.6 million and WA by 904,000, spurred by strong net migration. Australia's population is expected to increase by 2 million people to 27.7 million by 2026. It will increase to 31.3 million by 2036 and jump to 35 million by 2046, or about 420,000 people per annum. Ivan Motley, the founder of ID, a wholly owned subsidiary of PEXA, the ASX-listed e-conveyancing platform, said population growth was a key driver for housing supply. Quote, people go where there is somewhere to live, he said. Quote, there's clearly a shortage of housing and the lack of affordability, so we need to increase supply to address that. At the moment, we're not building enough dwellings to maintain stable vacancy rates and average household sizes. To meet housing demand for these increases in population, an estimated 723,000 homes will be needed across Melbourne. Sydney would need an additional 582,000. Across Brisbane, an extra 381,000 homes, while Perth needs another 334,000. Residential developers have to take on more risk of rising costs and delays if they want to secure access to builders and subcontractors at a time when demand for education and health work is booming, the head of Sydney builder Richard Crooks Construction says. Labour shortages and rising borrowing costs that make new projects less viable will force apartment developers to give builders more time to assess and price the risks they need to take on. And if they don't, those builders will work elsewhere, Jamie Crooks said. Looking to make the best use of the current market or considering your financial options? If you're either expanding your property portfolio, refinancing, or looking to sell your current property, get in touch today. We'd love to help. I'm Wal Galbraith with the Ray White South Coast Group, and that was your South Coast Snapshot for week 44, 2023. See you next week. Be well. Bye.